The Reserve Bank has released its financial stability report today. The key highlight from the report excuse me, is the Reserve Bank's observation that risks to banks remain elevated due to declining asset quality. Ritu and Latha both with us. Now, Ritu, let's start with you first. Any positives in that report?
Well, it's a rather bulky financial stability report, so we'll divide it into three parts: the good, the bad and the ugly. And I'll start with the good first. RBI defines leverage companies as those with negative net worth or debt equity ratio of greater than equal to 2. Here they say that the proportion of leverage companies in their sample size has come down from 19.4% in September of last year to about 14.5% this year. Their share in the total debt again has come down from 20.6% in March 2016 to 16% as of September. If you look at the highly leveraged companies, which are defined with a debt equity ratio of greater than equal to 3, their share in the total proportion of leveraged borrowers has come down from 15.3% in September 2015 to 13.5% as of September, and their share in the total debt has also consequently come down from 24.9% in March to about 14.5% in September. So overall, a good declining trend in the number of leveraged borrowers the system has.
All right, Ritu, so that was the good. But let's come to you, Latha, now. What are the bad and the ugly? I believe that there are major worries that the central bank has raised.
Well, the bad news is with the bank's asset quality. The financial stability report says that asset quality has deteriorated from March to September itself. In March, the total gross NPLs were 7.8%. It's risen to 9.1%. With even minor stress, this gross NPLs for banks is going to rise to 9.8% by March and further to 10.1% by next March, that is FY18. The important point is that the provisioning that they have done is inadequate even to meet their expected losses. However, the positive is that capital will be adequate. What is the worst part is the exposure to the top stressed borrower. If the top stressed borrower were to default, then for 11 banks, the profit will fall by 67%. For 3 banks, they will report net losses of 37%. So a fairly grim picture there.
All right, Latha and Ritu, thanks very much for detailing for us what the Reserve Bank's financial stability report says.